Hey, Trader Stephen here with TradersPlan.com. It is Friday, March the 18th. We're going to look at the overall market and then we're going to look at some of the top performing ETFs of the week and which ones are setting up. Before we get started, if you can, go ahead and subscribe to the YouTube channel and like the video. That way we can help as many people as possible. So let's start with the S&P 500. The S&P 500 looks better than the Nasdaq because the S&P did not undercut this low that happened. I believe it was on February 24th. Okay, so it didn't undercut this low mostly because of a lot of the strength in oil and other industries. But now it's kind of breaking out a little bit. It's kind of bounced off the bottom. And what's interesting is the legs are getting shorter, right? You can see that the first leg, the second leg, the third leg, it just looks a little exhausted. So you do have some major tests right here. You kind of got this breakout zone, which it needs to break out of. You got the 250-day crossover. So I wouldn't be surprised if it kind of pulls back a little bit, and then hopefully we can get out of here. Obviously, nothing is settled with the Russian invasion right now, so we'll still see. I am looking at this right now as a counter trend rally. You just kind of have to assume if now we're in kind of bear market territory, we're kind of assuming bearish outcomes. But that doesn't mean we can't have strong rallies. Okay, so you can still make money in this kind of environment if you play the bounces right. Book profits quick, raise your stop losses in case it does roll back over, that you're good to go. So let's look. So right now, I'm just kind of waiting and seeing. I'm comfortable with the amount of stock that I own, and just kind of seeing if this rally matures or seeing if it rolls over. Either way, you just got to be comfortable and kind of prepare for any scenario. Let's look at what was strong yesterday. Uranium and energy really bounced back. I think the energy oil is down a little bit, but I mean you can see right here on this URNM, it broke out pretty clear as day. And it's really came back and kind of tested this 73 level twice. And yesterday it bounced off it pretty good. So you have a breakout, and it's doing what it's supposed to be doing. This is a highly volatile ETF. I mean, any ETF that's up 8% in a day, that's pretty strong, right? And that can work against you as well. So, I mean, this to me looks good right here with just maybe a 10% stop loss or a stop loss kind of under Wednesday's bar, and see if that will hold. Again, right now the market has already rallied really strong 3 days. So if you trade, you can kind of see if it pulls back a little more, or you can also see wait and see what the market does on Monday, because a lot can happen over the weekend. So oil is interesting, and I'm just going to talk about this for a second. I'm not sold that the oil rise is just completely over, because even though you had a nice uptrend, then you had a melt up, it has kind of pulled back right to really this further breakout zone, kind of right in here, and it bounced off that zone yesterday. So it could chop around for a bit, but this is just this support level that it pulled back to. It's just kind of too convenient. So I'm thinking that this could continue to bounce, so we're going to look at some energy ETFs. But really, uranium, energy, nat gas were some really good looking ETFs, because you can see right here this FCG. Here's another one, right? It kind of broke out right here. It went up, it got steep, and then it pulled back right at this breakout zone, then bounced off again. So based on that evidence, I have to assume the energy, even though it doesn't have to shoot straight up, I don't think that move is completely over. Probably not until we have some solution over with the Russian invasion war at the moment. Russia-Ukraine war at the moment, excuse me. So let's look at, so you have some interesting energy ETFs. So with this right here, you could always enter with just a stop loss under the week's low, right, with energy. Those wouldn't be bad trades. You just kind of have to keep in mind that it might need a little bit more time to digest this move. So even though it did bounce off it, it might not go straight up. It might just kind of bounce around for a little bit. Let's look at, now that was just what was strong yesterday. Let's look at what was up for the week. So right now I'm looking at uranium. I'm looking at FCG. Those are two interesting looking ETFs with decent setups. So with the week, you kind of have take your pick. Now, when the market rallies like this, you're going to have a lot of the more aggressive stuff, like some of the ARK ETFs, really kind of just bounce off the bottom. I mean, these things have had a rough 14 months. So this one, the ARC FinTech, is actually the strongest one so far, and you can see it's kind of acting like the Nasdaq in the overall market, like it's in a downtrend, even though the downtrend is much worse than the market. It's now popping above the 20-day moving average. So you can see the last time it tried here that it held one day and then it kind of failed. So right now we're above it one day. The market's pulling back a little bit pre-market. I'm just kind of like, let's see what happens Friday. And I think a good, as aggressive as these are, I think a good reasonable entry would be if it breaks Thursday's high, right? You want to buy it kind of on the way up. That probably wouldn't be a bad idea, instead of, seeing if the market buying on a pullback and the market absolutely rolls over. So when you're trading this kind of a market, I think you have to do several things. One, you obviously have to use stop losses, right? This is not buy and hold. So, 10% stop loss max on anything. If it rolls over, let your stop hit. Two, you want to take very small position sizes, like the kind that wouldn't upset you, because right now the odds of just the market rallying really, really strong and getting out of this are not great. Like, we have to assume the market downtrend at least will continue, but be open to anything. So until the market really gets above the 50-day moving average and the technical picture starts to look good, I just think you want to take the more cautious approach of trading less and buying probably on the way up instead of on the way down, right? And just trailing it with a stop. So you got the ARC F ETF that's looking pretty good, and all of them are, right? You can kind of take your pick at aggressive ETFs, like which ones are the most aggressive. So I'd say the ARC F ETF, when I look at something and when I look at the market, when the market's up, I say, what's up the most, right? So that means like you're asking yourself which ETFs or stocks are the strongest in what sectors, and that's really where I want to park some money. Now, when the market's going down, I also say what's going down the least, right? So that way there is strength showing up and buying pressure showing up in some stocks, and those are usually good plays for when the stock market does turn around. But right now, that one's looking pretty good, or the ARC F, and we'll just kind of go down here, and you can really look at the list and say, okay, all the charts really look the same of these more aggressive, right? So you can see FinTech is right here as well. So you got FinTech right here, you got FinTech right here, you got ARC, you got Cloud. So a lot of the more aggressive tech stocks, FinTech, they did really well this week. So in my opinion, like they're trying to break out. You can see right here. If it pulls back today, I would probably let the re-break happen, right? Because you want to buy on the way up and then just have a tight stop, because if it rolls over, you don't want to get involved in that. Just let it happen, okay? So there's a lot of good-looking ETFs. I hope this was helpful. Have a great weekend. Enjoy March Madness. Let me know if you have any questions.